The Tories garnered 28% compared to 31%, while the NDP dropped to 16%, from 20%, on the weekend. Remember, this type of political situation caused the Canadian dollar to get crushed back in May. After Leighton's announcement yesterday, the Canadian dollar rallied. But of course today it has lost about 100 points. A vote of no confidence against the government passed on November 28. The next day Prime Minister Paul Martin dissolved the minority government and called for elections to take place on January 23, 2006. One important point to keep in mind when it comes to bringing down the government: the opposition doesn't do this unless it feels there is a strong possibility it can form the new government itself. Otherwise, the opposition won't do it if it would give the ruling government a chance to add to the number of seats it already has. Therefore, the Conservatives were confident that they could. Government scandals. 203. Win the election and form a ruling government when they helped bring Paul Martin's down. At the end of November, the Liberals had almost a 13-point lead in the opinion polls and were just 1.5 points away from the key 40% threshold generally thought necessary to form the government. The Liberals were ahead in the polling until it December, and the Conservatives went ahead and never looked back. There was very little difference between the platforms of the Liberals and the Conservatives in regard to economic policy. Therefore, the Conservatives ran against the culture of entitlement that they said was characteristic of the Liberals. After 12 years of Liberal Party rule, the Canadian voters, like the German voters in 2005, were probably tired of the party in power, something the 2006 House Republicans in the United States should have been worried about. The Conservatives won the most seats, but not enough to rule with a majority. They took 124 seats, the Liberals took 103, the BQ took 51, and the NDP took 29. 140 seats were needed to rule with a majority. In percentage of seats held by the governing party, the Conservative Party became the smallest minority government since Confederation. Stephen Harper became the 22nd Prime Minister of Canada. Market much ado about nothing. In January 2006, the markets didn't really do a whole lot, because the election didn't change very much as far as stability and economic policies were concerned. Had the election resulted in a majority status for the Conservatives, the market impact would have been larger, especially if they had run on a significantly different platform. The election turned out to be the equivalent of shifting the deck chairs on the political Titanic from one side of the boat to the other. There was an initial relief rally in the ZAY, but this was the direction the market was already going. It was the same for the Canadian dollar and the generic Canadian 10-year bonds. Similar to most other elections, all the action occurred well before the vote took place. For that trader, this means you have to stay on top of the developing political situations and not sit back for the actual vote. The event takes place as the dynamics shift from the party in power to the party out of power. The election is merely the verification that the change that took place years before was valid. The phrase, "it's all over but the shouting," suits the situation quite well. A gentle reminder. Event trading for politics is then similar to other event-type trading like hurricanes, where the action takes place well before the actual event occurs. 204. Politics. Hey, if it was easy, any idiot could do this, and that's the point. No quant jockey QJ can model this stuff, which is why they can't make money from it or incorporate it into their trading systems. This is precisely why you should follow event trading and take advantage of these opportunities. One doesn't need a PhD in mathematics or quantum physics. No, all one needs is diligence in keeping up on current events and an imagination to perceive all the potential outcomes. This is one of the reasons you bought this book. Let this desire spill over into researching what has happened in the past. I highly recommend doing something you probably never did in high school or college: read history books. It's through understanding the event and its sequence that one truly understands the outcome and the opportunity. Chapter 12. Modern. Short-term war. The enduring aspect of human existence over time is conflict. I think ever since humans could communicate, they would communicate that they didn't like other humans. Whether it was food, territory, riches, or religion, there has always been something to argue about and fight over. Wars are just our special way of organizing this activity on a large scale and therefore causing the most destruction. Wars are expensive, from the human cost to the cost of machinery and arms. This is one of the reasons the United Nations was formed, in an attempt to limit the number and scale of conflicts. Wars can be a boon to defense suppliers and a bane to consumers as materials get scarce for goods. They are disruptive to the culture and to the financial markets. Most important, they provide an amazing environment for making money. If we were to review wars in just the 20th century, it would take several books to cover them properly. Also, the nature of large, armed conflict has changed dramatically since the end of the Cold War. We have gone from large, worldwide conflicts involving many countries to more regionalized conflicts involving many internal groups. Also, we have gone from many superpowers to one, and that may be changing soon. The point is that war is constantly evolving, and therefore we should spend our time focusing on the most recent wars as paradigms for the future. 205. 206. Politics. U.S. Gulf War, Part 1. Amidst a rapidly changing geopolitical landscape, 1990 was a year that was dominated by events in the Soviet Union and the Middle East. Mikhail Gorbachev was still head of the Soviet Union and the Soviet Union was still the Soviet Union, but not for long. What was unheard of and unthinkable less than 2 years earlier, before the fall of the Berlin Wall, was now occurring almost daily as the Union began to break apart and republics within the Union began to vote for change. The Soviet Republic of Lithuania became the first republic to have the Communist Party come in second to reformers and those opposed to continued Soviet rule. Georgia, Estonia, and Latvia began to demand similar change. Change also came in the form of relations between the Soviet Union and the United States. Gorbachev and U.S. President George H.W. Bush signed an agreement to ban the production of chemical weapons and to destroy most of their stockpiles. Rapid technological changes were occurring within the United States. Computers and software improved dramatically as Microsoft shipped Windows 3.0 and the CD-ROM compact disc exploded in popularity. The stock market was performing well, with a new record high of 2,900.09 reached on June 1. McDonald's opened its first restaurant in Pushkin Square, Moscow. The year 1990 also had its business scandals as Drexel Burnham Lambert declared bankruptcy and the largest securities company failure and Michael R. Milken was sentenced to 10 years in jail for securities violations. George H.W. Bush began his presidency when the nation was enjoying the country's longest post-war expansion. The Council of Economic Advisers for the Bush administration boldly stated that the chances of a recession did not increase as the period of expansion ran on. By the end of the year, though, they would be proven dramatically wrong. They projected a 2.6% GDP growth rate for the year along with an inflation rate of 4.1%, which is high by today's standards. At mid-year, they would revise their estimates downward to just 2.2% for GDP growth, but up to 4.8% for inflation. The combination of slowing growth and higher inflation was the stagflation disease from the late 1970s that looked likely by the end of the year. In 1988, then Vice President Bush made a campaign promise of no raising taxes. In his acceptance speech at the Republican National Convention, Bush uttered these famous words: "The Congress will push me to raise taxes, and I'll say no, and they'll push again, and I'll say to them, read my lips, no new taxes." It was a phrase that would define his presidency and the major reason why he was not re-elected in 1992. The irony is that Bush would eventually lose to someone who also could not maintain a vow and eventually would be impeached for it. Modern, short-term war. 207. Unfortunately, it was also the fall of the first event dominoes that would lead to the Gulf War in the Middle East. Just like World War II, the seeds of this war were sown in another war. The Iran-Iraq War had ended in the summer of 1988 after Iran accepted the United Nations call for a ceasefire. However, the cost of prosecuting the war had been tremendous and Iraq owed billions to Kuwait, $14 billion, and Saudi Arabia $26 billion. Iraq and Saddam Hussein had hoped to export enough oil to make payments on the debt. However, a disagreement arose between Kuwait and Iraq over OPEC policy. Iraq wanted to keep the price of crude high by limiting oil production, while Kuwait did not. After supporting Iraq during the Iran-Iraq War, Kuwait was eventually accused by Iraq of slant drilling into Iraqi oil fields. On July 24, Iraq was reported to have massed 30,000 troops on the border with Kuwait. The number was increased to 100,000 within a week. Iraq invaded Kuwait on August 2, 1990. Political foreplay. On August 2, 1990, the United Nations Security Council met and passed a resolution condemning the invasion and demanding an immediate pullout of Iraqi troops. Resolution 660 stated that the United Nations, alarmed by the invasion of Kuwait on the 2nd of August 1990 by the military forces of Iraq, determining that there exists a breach of international peace and security as regards the Iraqi invasion of Kuwait, acting under Articles 39 and 40 of the Charter of the United Nations. 1. Condemns the Iraqi invasion of Kuwait. 2. Demands that Iraq withdraw immediately and unconditionally all of its forces to the positions in which they were located on 1 August 1990. 3. Calls upon Iraq and Kuwait to begin immediately intensive negotiations for the resolution of their differences and supports all efforts in this regard, and especially those of the League of Arab States. 4. Decides to meet again as necessary to consider further steps with which to ensure compliance with the present resolution. Thus began a sequence of UNRWA solutions that were groundbreaking and established a precedent for future dealings with Iraq. It was also significant. 208. Politics. In that it marked a level of cooperation between the United States and the Soviet Union that had not happened before and enabled the UN Security Council to take action against Iraq. Remember, Iraq was supported by the Kremlin in its war with Iran and was considered a client state of the Soviet Union. After Saddam Hussein rejected UN Resolution 660, the Security Council on August 6 invoked economic sanctions against Iraq with UN Resolution 661. This was also significant in that it was only the third time in the UN's 45-year history that it had done this. This was a signal to the world and the markets that the UN was serious and acting decisively toward the Iraqi aggression. It foreshadowed more aggressive action, and the markets quickly woke up to this fact. The United States moved troops into Saudi Arabia on August 7, 1990, on a wholly defensive mission named Operation Desert Shield. On August 25, the UN Security Council ordered a naval blockade to enforce the economic sanctions and trade ban. Another milestone was reached, as it had never sanctioned a military action without linking it to a specific UN command or resolution. Before the end of August, UN Resolutions 662, 664, and 665 quickly followed, condemning Iraq's actions on the Kuwaiti annexation and demanding the release of foreign prisoners. The unanimity on the Security Council was stunning, with not one vote against any of the resolutions. What was also stunning was the cooperation between Mikhail Gorbachev and George W. Bush. In September, they met in Helsinki and dissuaded a joint statement on the 9th that said they were united in the belief that Iraq's aggression must not be tolerated. On September 11, Bush returned from that meeting to address a joint session of Congress and the nation on the situation. Here's an excerpt that foreshadows military action and delineates what was at risk for the United States. America and the world must defend common vital interests, and we will. America and the world must support the rule of law, and we will. America and the world must stand up to aggression, and we will. And one thing more, in the pursuit of these goals, America will not be intimidated. Vital issues of principle are at stake. Saddam Hussein is literally trying to wipe a country off the face of the earth. We do not exaggerate. Nor do we exaggerate when we say Saddam Hussein will fail. Vital economic interests are at risk as well. Iraq itself controls some 10% of the world's proven oil reserves. Iraq plus Kuwait controls twice that. An Iraq permitted to swallow Kuwait would have the economic and military power, as well as the arrogance, to intimidate and coerce its neighbors who control the lion's share of the world's modern, short-term war. 209. Remaining oil reserves. We cannot permit a resource so vital to be dominated by one so ruthless, and we won't. For the markets, this is why we care about what happens in the Middle East. Until there is discovered or invented an alternative, renewable energy source, wars in this area of the world mean danger for economic growth. The threat of Iraq taking over Kuwait and then Saudi Arabia was a possibility and a major threat to stability in not only the Middle East, but the rest of the world as well. Market reaction. The financial markets convulsed over this threat, with crude oil being the primary shaker and mover. Its move was simply stunning, figure 12.1. Prior to the invasion, it was on a downward trend due to declining demand from a slowing U.S. economy. It bottomed as the Iraqi troops massed and then skyrocketed from $16 a barrel to over $40 a barrel by October. Natural gas had a similar insane ride and collapse, figure 12.2. Note the time frames. This occurred well in advance of when the actual invasion. Figure 12.1 Crude oil. Source. Used with permission from Bloomberg LP. 210. Politics. Figure 12.2 Natural gas. Source. Used with permission from Bloomberg LP. of coalition troops into Iraq occurred on January 17, 1991. This is consistent with the patterns we have seen across many of the events covered in this book. Getting back to the markets, you can see that the price of crude started falling and stabilized in December. It had one more spike up from $25 to around $33 as the invasion occurred and then dropped precipitously back to the levels from whence it came in July. Now that's what I call a spectacular reversal and return to the trend that was in place prior to the event. I would also add that the spike in crude oil helped cause the U.S. economy to slide into a recession and exacerbated the savings and loan crisis that was occurring at the time. Looking at stocks, the Dow Jones Industrial Average went down about as fast as oil went up, and over the same time frames. Figure 12.3 shows the Dow hitting a peak right before the July 24 massing of Iraqi troops. Then it plunged to hit its low in October. Now, equities were clearly on unstable ground, as U.S. Federal Reserve had raised rates to 9.75% by March 1989 and were just in the process of cutting rates down to 8.25% in December 1989, where they would stay until July 1990. Figure 12.4. How telling was it that the Fed cut rates in July and the Dow still fell 20% by October? Modern, short-term war. 211. Figure 12.3 Dow Jones Industrial Average source, used with permission from Bloomberg LP. Figure 12.4 U.S. Federal funds rate, source, used with permission from Bloomberg LP. 212. Politics. Figure 12.5 Russell 2000. Source, used with permission from Bloomberg LP. The smaller U.S. stocks got hammered worse. Let's look at the Russell 2000 index, which is comprised of the smallest 2,000 companies in the Russell 3000 index and represents approximately 8% of the Russell 3000 total market capitalization. This index dropped from 170 in July to 120 by mid-October, a hefty 33%. Figure 12.5. This underscores that the riskier investment gets hurt the most when the market encounters events that increase the uncertainty of future returns. On this consistent front, we see that the U.S. dollar index was already declining before July 24 and then dropped like equities until October. Figure 12.6. However, this index made a new low in February 1991 and then rebounded in March through July. It's as though currency traders wanted to make sure the war was won before returning the US dollar back to its previous levels. Now, as we know, the markets don't always fit into nice, consistent patterns across all instruments. The generic US 10-year note yields did some strange things that need some explaining. Figure 12.7 shows the yield dipped briefly in late July and early August. Then the yield went up 50 basis points from 8.5% to 9.0% and stayed around those levels until November. This is not what we would expect given the uncertainty of war and declining economy. However, consider the Consumer Price Index (CPI) at the time and remember what the Council of Economic Advisors. Modern, short-term war. 213. Figure 12.6 U.S. dollar index source, used with permission from Bloomberg LP. Figure 12.7 U.S. generic 10-year government note yield source, used with permission from Bloomberg LP. 214. Politics. Forecasted in the summer. CPI started the year spiking in January and then had another spike in August, with September and October still very high. This meant that fears of stagflation were abounding, and that's not good for bonds. Also, the spike in crude oil was making inflation spike as well and jacked up fears into the run for the medication stage. When oil collapsed, inflation fears subsided and bond prices rallied. However, due to this bipolar nature of the bond market, bond yields never dropped in dramatic fashion like crude oil. In summary, there were plenty of opportunities to take advantage of in trade. As a trader at the time, I was able to sell US dollars for consistent profits as the build-up to attack was progressing and the US economy was experiencing a mild form of stagflation. Most in the market at the time felt that oil was moving too fast to an unsustainable level given the weak US economy. Granted, this is in hindsight, but the best trade was to fade this move up, especially after Bush's speech to Congress. Something was going to be done, we just didn't know when. There was even a nice pattern between the end of October and the beginning of November. Oil had already seen a high and then a big drop to below 30. There were 2 attempts to get above 36 again that failed. You could have sold and left a stop-loss order above 36 that would have minted some very nice profits. This is a great example for event trading. You don't have to catch the initial movement, but you have to pay attention to the overall pattern that is developing. The event puts in motion the market and creates the opportunities. Sometimes the best trades or the easiest ways to make money are not from the first move, but from the subsequent moves and retracements to the initial moves. Aren't we missing something? Oh yeah, the actual war. The United States ended up massing some 540,000 U.S. troops in Saudi Arabia following General Colin Powell's doctrine of superior strength of overwhelming force before attacking. The United States built a coalition of 34 countries that contributed money and troops totaling 120,000 of the 660,000 that were finally gathered. Ironically, Syria joined the coalition and sent 16,000 troops, whereas Israel didn't join at all. The Israelis were persuaded by the United States to remain neutral to reduce friction from the Arabs in the region. However, the Palestine Liberation Organization (PLO) under Yasser Arafat openly supported Saddam Hussein. Arafat's choice proved to be the wrong one, and would set back the Palestinians in the eyes of Kuwait and Saudi Arabia. On January 12, 1991, Congress authorized the use of military force to drive Iraq out of Kuwait, but not to overthrow Saddam Hussein. The invasion started on January 17 with a massive air campaign. The most sophisticated, modern, short-term war. 215. Weaponry the world had ever seen was put into action against Saddam Hussein's Soviet-style army. To state the obvious, it was a mismatch of epic proportions. After a month of bombing, the ground campaign started on February 24. On February 26, the Iraqi forces retreated out of Kuwait. By March 10, Operation Desert Storm was over and the United States started moving troops out of the region. The war was interesting from another aspect as well, the media. We had all these scene reporters on the rooftops in Baghdad reporting when air sirens were going off and when bombs were exploding. ABC was there as well, and I particularly remember making money from one unique information sequence at the time. I decided that since the trading room I was in had no TV, I would make an investment off $100 and buy a handheld mini Sony TV for my desk. This way I could watch the news and then make trades if something occurred. We were awaiting the start of the air campaign, and every time the newswires reported the sirens going off or Iraqi anti-aircraft fire, the market would start buying US dollars, thinking that the war had begun. With the live coverage, I could see what was happening real-time as opposed to the delay that the newswires would report. This meant that I had between 30 and 45 seconds to execute a trade before the news broke and the rest of the market would begin buying US dollars. This was an eternity in a profitable news arbitrage. The Gulf War changed media coverage forever and also changed trading rooms around the world as well. Thereafter, every dealing room adapted by installing televisions and increasing the news services they had. Quite simply, faster information meant bigger profits. Gulf War, Part 2. One of the fascinating decisions made in the first Gulf War was to not oust Saddam Hussein from power. This will be endlessly debated, with compelling pros and cons. Bush must have felt that taking him out would create a power vacuum in Iraq and civil war. Since the Shiites were the dominant group in Iran and were the majority in Iraq, it was not illogical to assume that Iran would easily step into that vacuum and create an Islamist government aligned with Iran. This would then create a dynamic similar to what happened when Saddam Hussein invaded Kuwait, a concentration of control over oil and perhaps a threat to Saudi Arabia. Also, Bush believed that the mandate by Congress and the UN didn't give him the right to take Saddam Hussein out and would have fractured the coalition. Along with the political costs, it would have forced the coalition forces to go into urban areas to oust the Ba'athist leaders and to enter Baghdad to get Saddam Hussein. 216. Politics. In 1992, then United States Secretary of Defense Dick Cheney put it this way. So I think we got it right, both when we decided to expel him from Kuwait, but also when the president made the decision that we'd achieved our objectives and we were not going to go get bogged down in the problems of trying to take over and govern Iraq. All of a sudden you've got a battle you're fighting in a major built-up city, a lot of civilians are around, significant limitations on our ability to use our most effective technologies and techniques. Once we had rounded him up and gotten rid of his government, then the question is what do you put in its place? You then have accepted the responsibility for governing Iraq. In all fairness, he couldn't have foreseen that the United States would be attacked by terrorists who were trained in nearby Afghanistan. Also, Cheney didn't know that the problems with Iraq would persist and that the United States and its allies would have to create no-fly zones to protect the Kurds in the north. After the First Gulf War, the UN passed a resolution that required Saddam Hussein to destroy his ballistic missiles, stockpiles of biological and chemical weapons, and components for nuclear weapons. From the moment that resolution passed until the invasion in 2003, he would dodge and hide all of these from UN inspectors. In 1998, he kicked out all the UN inspectors. Under Clinton, this was tolerated as there was no reason to believe that the policy of Iraqi containment was not working. After 9/11, all bets were off. President George W. Bush made it clear that the United States would go after terrorist groups wherever they were in the countries that harbored them. On November 26, 2001, President Bush at a press conference stated this policy emphatically. Q. Sir, what is your thinking right now about taking the war to Iraq? You suggested that on Wednesday, when you said Afghanistan was just the beginning. President Bush, I stand by those words. Afghanistan is still just the beginning. If anybody harbors a terrorist, they're a terrorist. If they fund a terrorist, they're a terrorist. If they house terrorists, they're terrorists. I mean, I can't make it any more clearly to other nations around the world. If they develop weapons of mass destruction that will be used to terrorize nations, they will be held accountable. And as for Mr. Saddam Hussein, he needs to let inspectors back into his country, to show us that he is not developing weapons of mass destruction. Here's what I wrote in January 10, 2002, prior to President Bush's State of the Union SOTU address. Modern, short-term war. 217. Political points of interest as we get into 2002 from last night's Politics and Money show. 1. State of the Union probably won't include many specifics, unlike most of Clinton's past speeches. Look for broad themes of unity and patriotism and not much else. 2. Fiscal stimulus package. Good chance that Bush will stick to his position of corporate-friendly legislation with a willingness to let Tom Daschle take the fall if this legislation doesn't get passed. Good political ammunition for midterm elections and cover if the economy stalls in the summer-early fall. Battle of core ideological differences shouldn't be resolved. 3. Midterm elections. In 32 out of the last 34 midterm elections since the Civil War, the party holding power in the White House lost seats. And the House and the Senate have never been this evenly divided before, which would lead one to believe this loss of seats is going to occur. However, latest polls show Bush's approval rating exceptionally high and Americans like the direction the country is heading in. So it's going to be a question of how long Bush's coattails are for other Republicans. 4. Stealing thunder. Bush is again demonstrating his political astuteness by stealing issues that normally would fall to the Democrats. Food stamp eligibility for legal immigrants is the first salvo on this agenda. 5. Quagmires for the administration. Another domestic terrorist attack. Iraq. Iran and Afghanistan. Israel, Palestine. Enron and Cheney. Lieberman is staking out his political ambitions on this one. Deficit and a jobless recovery. Remember that gridlock and lack of legislative action from Washington during a midterm election period aren't necessarily a bad thing. I got a few things right, but was definitely wrong on the SOTU address. On January 29, I remember watching it in a hotel bar in Boston before I had to give a speech the next day. The SOTU laid the political groundwork for the invasion of Iraq by stating this. 218. Politics. States like these, North Korea, Iran, and Iraq and their terrorist allies, constitute an axis of evil, arming to threaten the peace of the world. By seeking weapons of mass destruction, these regimes pose a grave and growing danger. They could provide these arms to terrorists, giving them the means to match their hatred. They could attack our allies or attempt to blackmail